On Friday, the 10th of October, the crypto market experienced its own Black Friday. In a matter of hours, over $19 billion was wiped from existence. More than 1.6 million traders were liquidated, and it was all triggered by a single post on social media. This was the largest liquidation event in crypto history, and it's left many asking the same question. Is the bull market over?
Is it over?
Well, today we're going to cut through the FUD and give you the full story. We'll break down the minute-by-minute timeline of the crash and explain why it was so devastating. We'll dive into the geopolitical chess match between the US and China that lit the fuse, and we'll examine the mounting evidence of insider trading. Most importantly, though, we'll tell you what this means for Bitcoin, altcoins, and your portfolio as we head into a very uncertain week. My name is Guy, and you're watching The Coin Bureau. First up, though, I'm not a financial advisor, and nothing in this video should be considered financial advice. This is educational content meant to inform you about the recent crypto market crash and its potential implications. If that sounds good, hit that like button and let's get into it.
Let's get to it.
So, to understand the sheer violence of this crash, we first need to set the scene. Early last week, the market was pretty euphoric. Bitcoin had just printed fresh all-time highs above $126,000, and sentiment was overwhelmingly bullish. By Friday morning, BTC was still trading comfortably above $122,000. But behind the scenes, the geopolitical tectonic plates were shifting. On Thursday, the 9th of October, China announced new export controls on rare earth minerals, a critical component in everything from iPhones to F-35 fighter jets. This was a strategic power play by Beijing, and it did not go unnoticed. On Friday morning, President Trump fired his first warning shot on Truth Social, threatening a, quote, massive increase in tariffs on Chinese goods. This initial threat was enough to rattle the markets, with Wall Street's fear gauge, the VIX, soaring 32%. And Bitcoin began to bleed, dipping from the $122,000 level to around $117,000. But that was just the appetizer. The main course arrived later that afternoon. In a second decisive post, Trump declared that the United States would impose a 100% tariff on all Chinese imports, quote, over and above any tariff that they are currently paying. Trump hit the send button and the floor fell out of the crypto market. Bitcoin fell $3,000 almost instantaneously, but that was just the beginning of a historic liquidation cascade. Within hours, BTC flash crashed to lows of $104,500, even touching $102,000 on some exchanges. In a single day, the world's biggest cryptocurrency had dropped by $20,000. Altcoins, meanwhile, were absolutely eviscerated. Ethereum plunged 21% from its highs, while majors like XRP, Solana, and Dogecoin crashed between 20 and 30%. Others, like Cardano, Chainlink, and Aave, fell as much as 40%. So then, why was this crash so incredibly severe? Well, it was the perfect storm of extreme leverage, very poor timing, and failing infrastructure. For weeks, leverage had been building up to precarious levels. Just before the crash, Bitcoin open interest had surged to a record high of over $94 billion. Think of it like a skyscraper built on shaky foundations, and Trump's post as the earthquake that brought the whole structure down. The announcement also hit on a Friday afternoon, a period of notoriously low liquidity when traditional markets are closing. This created a domino effect. As the price fell, leveraged long positions were automatically force-sold by exchanges. These massive sell orders pushed the price down further, triggering even more liquidations in a vicious downward spiral. In total, a staggering $19.1 billion in leveraged positions was wiped out in just 24 hours. Now, to put that into some perspective, the infamous COVID crash of March 2020 saw just $1.2 billion in liquidations. The FTX collapse triggered around $1.6 billion. So, this event was nearly 20 times larger than the COVID panic, and it impacted over 1.6 million individual traders. The carnage was amplified by the very exchanges meant to provide stability. High-profile traders reported that major platforms like Binance, Coinbase, and Robinhood experienced technical issues, with order books freezing and stop-loss functions being disabled at the most critical moments. So, this technical failure turned a sharp correction into an all-out market collapse. Now, while Trump's post was the trigger, he claimed the move came, quote, out of the blue. But, in reality, this trade war has been bubbling up for months. The core of the dispute revolves around long-standing US grievances over unfair trade practices and intellectual property theft by China. Trump's second term has seen him reignite this conflict with a vengeance. And China's latest move to restrict rare earth minerals was a direct shot at a key US vulnerability, an attempt to gain leverage ahead of a planned meeting between Trump and President Xi at the APEC summit at the end of this month. Trump, publicly embarrassed after previously claiming the rare earth issue was, quote, done, retaliated with his signature move: massive, unpredictable tariffs. It's a high-stakes game of geopolitical brinksmanship, and the crypto market just got caught in the crossfire. But the sheer perfection of the timing of this crash has led many to suspect something more sinister than just a geopolitical spat. So, was there insider trading? Well, the evidence is compelling. On the derivatives exchange Hyperliquid, one whale wallet executed a series of perfectly timed trades that netted them a reported profit of nearly $200 million. Blockchain analysis shows this trader, identified as a Bitcoin OG who has held coins since 2011, began building massive short positions against BTC and ETH just days before the crash. Then they doubled down on these shorts just 30 minutes before Trump's tariff announcement. This uncanny timing has led to rampant speculation. Was this simply a savvy macro trader reading the tea leaves, or did someone get an early whisper of Trump's plan? Prominent crypto attorneys are already calling for a full investigation, and hey, who can blame them? So, with the market in turmoil, the multi-billion-dollar question is, where do we go from here? Can Bitcoin and altcoins recover? Well, let's start with the good news. Despite the chaos, Bitcoin held the critical $100,000 support zone. After a brief dip below $102,000, it quickly bounced back and has since stabilized in the $110,000 to $113,000 range. So this tells us that the crash was primarily a derivatives-led leverage flush, not a fundamental breakdown in spot market conviction. In fact, on-chain data shows that institutions saw this as a massive buying opportunity. BlackRock's spot ETF reportedly scooped up over 21,000 BTC mid-chaos, and XRP whales added over 1 billion tokens to their bags during the dip. This suggests that the smart money believes the long-term bull run is still very much alive. The fundamentals have not changed, only sentiment and leverage have. This event has brutally reset the market, clearing out the excessive greed and creating a much healthier foundation for a sustainable climb. However, that said, the path forward is far from certain. For altcoins, meanwhile, the picture is a lot more concerning. The carnage was so severe that many are asking if altcoin season is now over before it even truly began. The altcoin season index has fallen to 55, well below the 75-point threshold that signals a true alt season. Bitcoin dominance has spiked as capital has fled to the relative safety of the king. This doesn't mean altcoins can't recover, but it does suggest that the days of everything pumps are likely behind us. The next alt run will probably be much more selective, driven by specific narratives like, for instance, AI, real-world assets, or upcoming spot ETF approvals for tokens like Solana and XRP. And this brings us to the single biggest variable that will dictate the market's direction for the rest of the year and beyond: Donald Trump. The entire recovery timeline is now dependent on geopolitical headlines. When are these trade issues likely to be resolved? Well, the short answer is nobody knows. Trump has set a 1st of November deadline for the tariffs, which does provide a few weeks of negotiating room before the APEC summit on the 31st of October. And history shows us that Trump often uses extreme threats as a negotiating tactic before later backing down, a strategy some have called the taco trade. Trump always chickens out. So he could very well walk back these tariffs in exchange for a concession or two from China. However, his first trade war from 2018 took a full 18 months to reach a Phase 1 deal. Investors must now price in the risk that this could be a long, drawn-out conflict. If trade tensions persist, the crypto sell-off could evolve into a broader macro correction. If they ease, we could see a powerful relief rally. The market is now hanging on every tweet, every headline, and every rumor. So, to wrap it all up, the shocking crash on the 10th of October was triggered by Trump's 100% tariff threat on China, but it was fueled by the most extreme leverage buildup in crypto history. This created the largest liquidation event ever recorded, wiping out over $19 billion and affecting more than 1.6 million traders. While the evidence of insider trading is highly suspect, it remains unproven. The good news is that the structural bull market drivers remain intact. Institutional players bought the dip, and the crash served as a much-needed leverage reset. However, the recovery is now hostage to the whims of geopolitical negotiations. The path forward will be volatile, unpredictable, and entirely dependent on headlines. The bull market is not over, folks, but the rules of the game have changed.
The rules have changed.
And if you want to learn more about how market manipulation can cause events like this, then you can watch our video on that right over here. And if you want to understand the crypto market cycles that could still propel us higher, then check out our deep dive on that right over here. As always, thank you all for watching, and I'll see you again soon. This is Guy, signing off.